In this presentation, we will take a look at an adjustment for AGI, adjusted gross income related to self-employed health insurance. With regards to the income tax equation, we're going to be focusing in on the second line. We have income, and then we have the above the line or Schedule 1 or adjustments to AGI deductions as opposed to the standard deduction and itemized deductions. With regards to the tax return, this is page 1 of the 1040. We're talking about line 8A, which is going to be the adjustments to income from Schedule 1, line 22. Then we'll go to Schedule 1. If we go to Schedule 1, we're talking about the self-employment insurance related to line 16. Now, the self-employed health insurance is typically going to be related to someone who has a Schedule C business. So we have a business. Schedule C business is specifically what we're thinking about most of the time, meaning they have a business and they're going to be reporting it on a Schedule C. Once that is the case, then we're typically going to have a self-employment tax, which will show up here on the Schedule 1 as well, in that not the tax, well, the self-employment tax, and then 1/2 of it will be deductible. So this will be apparent there. And then you got to think about, well, is there going to be any health insurance for the self-employed individual that would be related to this? Now, why would that be deductible? You'll note that when you think about the health insurance, oftentimes for businesses, the benefit of health insurance is kind of tied into to one of the benefits you have, and if you for a corporation. So in other words, if you provide health insurance to employees of the corporation, typically you're going to have a deduction on your corporate tax return related to it. You'll recall from prior presentations when we talked about self-employment tax that the IRS has basically taken the perspective that a self-employed individual who has a Schedule C is kind of like they're the owner and they're the employee, and that's why we resulted in having Social Security and Medicare taxes for FICA taxes related to them that we had to calculate, as well as the deduction. Well, we have a similar method here when we think about health insurance. If you're your own business and you're trying to equivalate having a Schedule C type business to like a corporation, you got to think, well, if I was an employee of the corporation, I would get to be able to deduct the part of the health insurance. Now, you would think that this deduction would be on the Schedule C as basically an expense on the Schedule C, but it's not going to be on the Schedule C. It's going to be on the adjustments which will flow over to Part 1. So you can have a Schedule C, business expense or income, business income, and expenses related to generating income, not including typically the health insurance, which would then be deductible because you have a business in certain circumstances, which we'll talk about, which would then be deducted on the page 1 of the 1040, supported by the Schedule 1 Part 2. So self-employed health insurance. Self-employed taxpayers could possibly deduct up to 100% of self-employed health insurance payments. Could be limited to, in a couple ways, and those include you cannot exceed the net earnings from self-employment from the trade or business. So when we do the Schedule C, you're going to have income minus expenses related to the business. And so typically your amount of deduction related to self-employed health insurance can't exceed the net income that's related to that business activity. If taxpayer is entitled to participate in any subsidized health plan maintained by any employer of the taxpayer or taxpayer's spouse, no deduction is allowed. So note the idea of this deduction, you'll recognize that the health insurance is often kind of tied to employment in some way. So oftentimes there's going to be some type of benefit if you're employed by somebody that will allow you through that employment have some benefit related to the health insurance. And what we're trying to do for the self-employed individual, the idea, in my interpretation of the idea, would be that we want to basically have that be the case. But if someone is self-employed and they don't have the option of being employed under some type of other plan related to the employment. So in other words, if you had your own business, but you also worked as an employee and you were able to participate in the health plan as an employee, then typically the idea is that you would take advantage of that health plan and not do the health pay for the insurance yourself. So the idea would then typically you would be on the employee plan as an employee. And if your spouse, for example, had a plan that could cover the family and you're able to participate in that, the idea then would be that the choice would be to participate in that health insurance plan. If that's not the case, if those two things don't cover you, then you would think that you'd be required to basically have your own health insurance as a self-employed individual with a Schedule C. And that's when the IRS would say, under that condition, we would like to provide the benefit of having the deduction for it.